Bang. Welcome back, folks. I am Jon Najarian, and this is 3 at 3. Actually indoors, mainly because here at Art Basel was a little windy, and you likely wouldn't be able to even hear me because it's that kind of windy. It's supposed to die down a bit, but it's going to be a breezy day, they tell me, down here in Miami for Art Basel. So for the first trading day of December, let's get started with 3 at 3, which means, of course, unusual option activity. This is activity that we have found through our algorithm known as the heat seeker, looking for large blocks of calls or puts that have been purchased. And we care about that because then it is a leveraged bet in a bullish or bearish direction, depending on which way they decide to play. If they're buying puts, that's bearish. If they're buying calls, well, that's bullish. So let's get started with today, the 1st of December, 2022, 3 at 3. And let's start first with this one, just because I thought that it went way beyond ironic that CNN was saying Elon Musk could threaten free speech on Twitter by literally allowing people to speak freely. Let that sink in. And that's not just me putting that on there. Look at the chyron, in other words, the writing under Don Lemon and Elon Musk. It says Elon Musk could threaten free speech on Twitter by allowing people to speak freely. Can't make this stuff up. It's one of the dumbest chyrons I think I've ever seen. Inexplicably implying, I guess, that if people speak freely, that's shutting down free speech, which is an interesting claim. I'll grant you that, but it is completely not true. So I guess we need Captain Obvious, huh? Captain Obvious here to say that's pretty damn stupid. And whoever wrote that on CNN should, if not be fired, at least maybe be let them out of the basement for a few minutes and, breathe some of the free air rather than sitting in the dark trying to come up with something negative about Elon Musk and free speech. All right. Now that I've done that, let's talk about WB, which is, of course, not Warner Brothers Discovery, I'm sorry, WBO. And WBO Corp, when we saw it, was $11.94. Now we've shown you when it went to $12.94 and even 13. Well, now today it hit 16, because if you look at that little box I've got on the screen there, you'll see that the high of the day is 16. And yes, it's down 73 cents now, but it had closed at $15.94, just shy of 16 last night. So we have taken some nice fat profits yesterday, late in the day, as it rallied to finish at that $15.94 level. And now today it traded just 6 cents higher and then kind of pooped out. So I'm just letting you guys know that I have exited my position, because one of my disciplines is when the options double, I take half off. And then I put a mental stop at a level usually 20, 25 cents below where I got out of the first half, 50%. And then since it kept going to the downside and then ended up going down 73 cents, easy decision, pulled the trigger as it was falling past, like I say, that 25-cent threshold that I'm usually willing to take the first 25 cents in downside, thinking that, well, it might just go right back to the upside. Nope, out of it now. So full disclosure and DDA, which is discipline dictates action. Encourage you to join this one at the market close today. How to trade like a pro. December 1st, 4 p.m. Eastern, 3 p.m. Central, there will be a webinar. And if you go to our site and sign up, we will send you a copy of the webinar. So whether you can attend live or not, you will get a copy if you register, and it costs you nothing. That's completely free. It's not, you have to post a credit card or anything else. Nothing like that. You can just sign up on the site and see how to trade like a pro today, 4 p.m. Eastern time. There's little celebratory cigars from probably that WBO trade. Bang. And now for the fresh meat, my friends. Fresh right now, WBD, Warner Brothers Discovery. All right. 5,000 June 1250 calls with the stock trading at 1165. So obviously a bullish trade. They're looking for the stock to rally just under $1. And a quick cop could result in these options that, as you can see on the screen here, they were purchased for $1.70. That's more or less the at the money. And then the others were sold against it. The June 1750s sold for 45 cents. So basically, you're in the trade for, call it $1.25. I mean, pretty interesting. And it's a $5 spread, the differential between the strike price where you can own it, $12.50, and the strike price where you've let somebody else take it from you, $17.50. So you've created that $5 spread and you've paid $1.25 for it, which means $125 per spread. So if you're simulating 1,000 share position, you would buy 10 of those spreads, spending $1,200, and you'd be in a position to turn that $1,250 investment into $5,000 if we get to $17.50 or higher. And you've addressed time decay, which is not severe because these are January options, and you've addressed directional bias, which it is a bullish trade, but it's not quite as bullish as a naked call purchase. So that's where we stand. Pete and I, Rebel's Edge Live, encourage you guys to join us. We were joined by Mark Lopresti today, and we talked about a number of stocks like Splunk that he targeted a little over a month ago for a big rebound. Well, happened, and the stock was up huge today. 4 days a week, Monday, Tuesday, Wednesday, Thursday, 4 days a week, we do Rebel Edge Live, 1 p.m. Eastern Time. Encourage you guys to join us. Remember, you can always watch it on YouTube as well after we've done it. So it streams live on Twitter. You can get it on Spotify. You can get it on marketrebellion.com. All right, let's go for another one, shall we? SSRM. SSRM stock is 1573, and somebody bought the 17 calls 5,000 times. So that is 50,000 share equivalent for those calls. They control 50,000 share equivalent at that strike price. $17.25 above where the stock is trading. All right, bullish trade. They also sold puts against it to help pay for those calls. Now, here's what that means, folks. They have a commitment now to buy the stock should it dip below 14. They could get put stock, because a short put means the owner of the stock can put stock into your account at that strike price, 14. And in other words, that person is becoming Warren Buffett. They are becoming an insurance seller. That's what Warren Buffett's main business is. And that helps offset the cost of that call. So in other words, they only put up 22 cents to own the stock at 17, but they have an obligation to buy it if it falls below 14. Bang. Like the trade, I'm in the trade. SSRM 1573, and they were buying those 17 calls, selling the 14 puts in January. Well, next week, I'll be back in Miami. I'm going to go back to Puerto Rico tonight, but back in Miami next week for our live trading event. They tell me we still have 2 tickets. Sorry, 2 tickets available. If you'd like to join us, you could be the last 2. Sign up now, folks. Go to marketrebellion.com/Miami. That's marketrebellion.com/Miami. There will still be some pretty interesting art on display, but this is really Art Basel right now. So you won't have quite the same crowds next week, but you'll have 2 days of live trading with some of the best and nicest people on the planet. Please join us. That's marketrebellion.com/Miami. And one last trade, Farfetch, FTCH. Farfetch, it's $5.82. They're buying the April 10 calls. So these are out there in the future pretty far. April is 5 full months out into the future. So April 10 calls, in other words, can the stock go up, better than 40 some odd percent? Yes. Does it have to? No. If we see a pop, for instance, to 650, these calls that were purchased for, call it 50 cents, will probably trade 75 cents just with that pop. It's all about timing, folks. So the trade-off with the trade is that you only have from now until April. But that's a long time, like I say, 5 months. And I like the trade. The open interest was small. So this is a new trade, somebody betting on fashion with Farfetch, FTCH, $5.82, and they're buying the 10s. I don't buy that far out of the money. I'm buying at the money and selling upside calls and trying to do that for about 50 cents. Bang. That's going to do it for us today, folks. Appreciate you joining me. I will be back tomorrow. There won't be a Rebel Edge tomorrow because that's only Monday, Tuesday, Wednesday, and Thursday. I'd like to thank Mark Lepresti again for joining us today for that. I'll be back tomorrow at 3 for the 3 at 3 show. And remember, marketrebellion.com/get started is how you can move your game up to that next level by trading options like a pro. Enjoy, folks. I hope many of you can join at 4 p.m. Eastern time today, about an hour and 15 minutes from right now. No, about 45 minutes from right now. Bang. I'll see you tomorrow, folks.